Good afternoon. I'm Jack Farmer from the New York Institute of Finance, and I'm here today with Paul Wiley, who's a recognized expert in business taxation. Paul currently works at Highbridge Capital and previously worked at Bridgewater Associates, and he has over 20 years experience. But I'm going to let him tell you a little bit about himself, and then we're going to go through what's going on with taxation for businesses that has been motivated by the COVID pandemic. So Paul?
Hey Jack, nice talking to you again. Thank you. Yeah, just to expand and to introduce myself to the broader audience, I've got 20 years experience servicing the financial services, hedge fund, alternative investment industry from a tax and accounting perspective. I've worked on both sides of the table, so to speak, the buy side, working directly at a hedge fund or a private equity fund, as well as a service provider, working in the working in the public accounting industry.
That's very good. So I think, you've had, in your business work, have you had a lot of experience, with Highbridge needing to make adjustments or things because of the COVID legislation and tax changes, or businesses like Highbridge, which is a hedge fund, right?
Yeah, that's right.
Yeah, they're not really impacted that much by the legislation.
Well, so I would say yes and no. There certainly are second and third order consequences in connection with the various phases of the COVID legislation that do affect hedge funds like Highbridge. A couple of the things we're going to be covering today, namely net operating losses and how they're treated, as well as the deduction of interest expense.
Okay, sounds good. So why don't you start by just bringing us up to date on what's going on with COVID tax legislation, where are we right now, and then we'll talk about where we're going.
Okay, sounds good. So where we are in the field right now, we're about 10 weeks into working from home. We're about $3 trillion of relief in effectively 4 phases of coronavirus-related legislation. Some of these phases have effects on business taxes, and that's really where the focus of our conversation is going to be. But to take a step back and to look at it at a more high level, what I'm referring to as phase 1 was signed into law on March 6th. It's called the Coronavirus Supplemental, and it was really Congress's initial response, which largely funded government agencies like Health and Human Services in terms of research for a vaccine and stuff. Phase 2 came into law March 18th, and that's called the Families First Coronavirus Response Act. That really, the intent was to target relief for individuals who are out of work due to the pandemic. Phase 3 was implemented on March 27th, and that's called the CARES Act. That is the largest of these phases, coming in at over $2 trillion, and was really designed to provide broad-based relief to all sectors of the economy: consumers, businesses, small, large, middle market, as well as providing money to government agencies and health service providers. 2 of the flagship programs that were created here are what's known as the PPP, the Paycheck Protection Program, and then the Small Business Association loan. We'll talk a little bit more about that in a minute. And so the most recent phase came into law on April 24th, and I'll refer to that as phase 3.5 because it doesn't break a lot of new ground. It's what Congress would refer to as a plus-up bill, and it's called that because it's really geared towards refunding initiatives that were created by the previous phases. In this case, primarily the 2 programs that I just mentioned, as well as providing additional money to medical organizations.
Very interesting. And so where do you see things heading legislatively?
Well, Congress is back in session. Most congressmen came back to town over the weekend. Congress is going to start session again today, the 4th of May. The expectation is that there's going to be more legislation, but when is that going to happen and what is it going to look like, I think is really the question that everybody's asking. There's a lot of stuff that people want. There are, when I say people, I should say from a partisan perspective on either side. But there's also a difference of opinion in terms of how best to move forward. So for example, the Republicans have largely indicated that they'd like to put a pause on any additional legislation. And the reason that there's reasons they're citing for doing that, the main one is that they want to, number one, they want to just see how the economy is impacted by the legislation that's been passed to date. There's also some thinking that the Republican side of the Senate isn't all that comfortable with the way that the administration is engaging directly with the Democrats, and they want to put a pause on it to make sure potentially that they've got a seat at the table when some of these negotiations happen, because there are some things that the Democrats very much want or want to focus on that the Republicans may not, namely additional funding for states and local jurisdictions, as well as infrastructure projects. So in the meantime, it looks like the cash from the Plus Up bill is gonna run out shortly. So the question is, again, what are they going to do and when are they going to do it as we see these partisan lines start to appear and be drawn? It's looking like the phase 4 might just be updating existing COVID legislation. And if that's the case, then are we talking about a phase 5 for perhaps infrastructure projects and funding to states? What sort of adjustments might we make to the existing COVID legislation? It can be a function of, you know, what we're seeing in the papers in terms of feedback from taxpayers and media outlets with respect to how businesses are engaging with programs like the Paycheck Protection Program. You know, we've seen certain corporations like Ruth's Chris Steakhouse, like Shake Shack, have been criticized for taking the money, even though they, you know, technically did qualify. And in some cases, the companies have given the money back. In some cases, the companies have been asked to give the money back. And the question is, you know, what sort of adjustments, if any, need to be made to that program to accomplish what the original goal was. Something else that is a more recent question is, should the recipients of the Paycheck Protection Plan money also be allowed to deduct expenses associated with the money that they receive? The IRS has come out and indicated that they think the answer is no. Congress, certain members of Congress in response have said, well, our intent was that they should be able to take these deductions. It's certainly easy enough for Congress to go in and make an amendment to the code, section 265 or perhaps whatever, but you know, what are they going to do with respect to that remains to be seen. And you know, something else is in relation to what we're going to talk about in a minute with net operating losses. There's been some feedback with respect to the loosening of rules around pass-through entities being able to avail themselves of a larger net operating loss benefit than I think was certainly contemplated when the legislation passed.
Yeah, well, I mean, you certainly can't blame companies for taking advantage of what was, you know, legally offered to them. And as you said, I mean, the law specifically said that if you have a franchise or, you know, units of your business that are less than 500 employees, then you're allowed to you know, apply with everybody else. So you can't really blame businesses for doing that. But,
agreed. That being the case, I mean, it's difficult to say, but again, you know, public opinion is what it is.
No, yeah, I'm not criticizing the criticism of it. I'm just saying,
Not fair enough.
you know, if you want to point the finger, it should be at the legislators who put that into the bill and did so very deliberately. And I guess they wanted to open it up to bigger businesses. So, and they did.
That's right. And you know, this is something that also happens when there's a rush to you know, draft these bills or this legislation. I mean, sometimes things are just overlooked.
Yeah, I mean, sometimes they say they're overlooked, but I have a feeling that, yeah, sometimes they're in there and then they say, oh, we made a mistake maybe.